Budget 2010 brought to you by Harith Fund Managers.
We're now joined by Ibrahim, CIO from Oasis Asset Management in our Cape Town studios. Adam, a very good evening to you. Let's get your thoughts on the budget and whether you were disappointed or relatively relieved that we didn't see any changes in policy and, of course, mandate.
Hi, Eleni. I think it was a very balanced budget, very little unexpected. And importantly, I think the markets reacted, the currency reacted very positively to the budget. So I think if you look at what the minister has been doing and for the last 10 years with his predecessor, they've actually been delivering really, really boring budgets, which is great for the financial markets. You don't expect major surprises, and we didn't receive major surprises. The interesting thing that came through this year's budget was really the introduction of Sharia Islamic finance to the South African market in a more broader way. And it's come in two elements. Firstly, in the budget speech, talking about some of the tax changes that need to happen. And secondly, in an announcement after the budget, during the afternoon, a press release and a document for discussion to the end of April, which focuses on Regulation 28, and amongst Regulation 28 is the introduction of Islamic finance into the retirement fund industry. And I think that's a big, big change. The second big change with regard to Regulation 28 is to ensure that with member choice in retirement funds and retirement annuities, that the same diversification rules apply for the individual as it would apply for the fund.
Ernie, let's get your tax view on that, and Islamic finances now really being recognised at a greater level here in South Africa.
I think it's something that wasn't unexpected. The Sharia law type of financing transactions, I think it wasn't a great surprise. It was just a question of when it would be introduced, and it was this year.
James, looking at the construction sector rallying 4.2% today, no surprise there, really on the back of the fact that we're seeing an investment of 845 billion rand for the next 3 years in this sector. Your view on this, can we afford it?
Well, what struck me was the way that was actually inserted. What's clear is that the South African consumer is under pressure. You only have to look at the big decrease in the VAT receipts. You only have to look at the increase in petrol price that was announced, and the fact that 846 billion is not going to be recovered through tax receipts, but it's going to be recovered through higher administered prices. So when they talk about no tax increases to the poor old South African consumer, yes, it might not come off your PAYE, but it's certainly going to come through in terms of higher electricity bills.
Ernie, maybe you could give us your view on that. I mean, Pravin Gordhan did say that we should be expecting higher tax increases going forward.
Yes, he did sound that warning, didn't he? And preparing us and preparing the market, and quite wisely too, because it wouldn't have been wise to just suddenly increase the marginal rates or the corporate rates in this budget. So he's giving warning, depending on how the economy goes. It's a difficult one, of course, for him. I mean, there's unlimited needs and limited resources. So tax, whether we like it or not, is what makes the country run. It's the petrol. But ultimately, whether we talk, James referred to administered prices, those are really just invisible taxes. Whether it's a toll road tax, whether it's electricity tax, whether it's an NHI tax, or levy, or whatever label you put it, it's really just another tax.
James, your response to that?
Yeah, it's almost a hidden tax. So one can put out the headline, no immediate tax increases, but yeah, your electricity bill goes up, and you're going to be paying tolls at roads. And together with the fact that, and to his credit, he did acknowledge this, the public sector wage bill has doubled in 5 years, and if it continues at that rate, you're going to see a larger and larger proportion of tax receipts taken up by public sector payroll.
And that's why
how productive is that?
Yeah, and that's why you're seeing your structural inflation running at 5%, because of these very high administered price increases. And if you're looking at your wage bill rate running significantly around 10%, it's going to be very hard to bring inflation back within target. So I think that's a key concern of this budget. If you are going to shift the cost obliquely, sideways, you're going to be running at a significantly higher rate of inflation, and that obviously has implications for monetary policy in South Africa.
Which pushes interest rates up, which puts the consumer under even more pressure. So beware those consumer stocks.
Brigid?
I think what was quite encouraging, though, is that forward, longer-looking, ahead of the curve kind of mentality came through when he was talking about wage subsidies specifically for younger people leaving school. And I thought that was quite forward-thinking in terms of creating a new network of younger individuals who will be going into the workplace that will potentially, in time, become a revenue contributor. So, you know, I think that they are they are very aware of the fact that we're in the current predicament, but they are looking at ways of combating that in the years ahead.
Adam, let's bring you into this conversation. Your thoughts on this. Clearly, one of the big problems that we're faced with right now is the increase in wages for the public sector, which has doubled, as Ernie alluded to, has doubled a lot in the last 5 years. But Bronwyn Gordon said that it is going to start levelling out going forward.
I think I agree with the concept that a growing public sector has a risk of crowding out the private sector. But if you look, firstly, going back to the infrastructure spend, we really need the power stations and we need the roads. And if you look at the prices we currently pay, it's very low by international standards. So it's a trade-off between better roads, more electricity, or light at the end of the tunnel, and paying up for it. And I'd rather do that and then sit without electricity and low growth in this economy. The interesting thing about the infrastructure spend, a very, very big percentage is spent on the domestic side of the economy. Moving back to wages, I think South Africa, you know, we had a meeting yesterday and I was pleasantly surprised in Ireland that rentals have come down 25%. Wages have come down between 25 and 30%, which makes that country a lot more competitive and it's able to trade its way out of its financial problems. And what we need to do is have as flexible economy, but as the public sector wages grow, it's a lot more difficult to cut those wages.
Well, here's Minister Bronwyn Gordon on public works. Let's take a look.
Over the 2009-2014 period, the second phase of the expanded public works program aims to create 4.5 million short-term job opportunities. An estimated, I hope you got the opportunities right, ladies and gentlemen. An estimated total of 52 billion rands is available for various expanded public works programs over the next 3 years. The MTEF allocations include an additional 2.5 billion rands that will support labor-intensive projects in the social, non-state and environmental sectors, largely targeted at rural areas. And Ministers Nkwinti, Patel and Jumat Peterson will be giving effect to those programs.
At the end of the day, we're sitting with unhealthy deficit numbers and we should be thinking more long-term, isn't that so, Brigid?
Absolutely. I think that's the big picture here, is where we've got to get our head around the fact that we are, you know, gathering momentum up a curve that we were very, very far behind in. We're trying to compete in a developing world where there's a lot of other developing nations where we are in competitive strings with. And I think that we've got to think about the generations that are ahead of us and bear in mind that we are going to pay the price right now to get ourselves up that curve. But eventually that, you know, that will start to pay off. And it is a price that we're going to have to pay.
So what other solutions can we put on the table, Annabel?
Well, I wouldn't be too negative about our budget deficit. You know, we are looking at the moment projections for it to come back down to 4%. And, you know, to be fair, it really has been ballooned up significantly by both a recession and by very weak growth rates. So running a budget deficit closer to 3% is really not a problem, you know, especially for South Africa, given its huge infrastructural developmental needs, social developmental needs as well. And from that point of view, you know, we would certainly like to see government making the effort to spend the cash, and rather than to actually try and focus too much on fiscal savings. You know, I think some of the predicament we're in now, which came about towards the late 90s, was because government was too sharp with fiscal conservatism.
So it's about finding a balance at the end of the day.
It is about finding a balance. You know, and if you do take too much away from infrastructure spend, which is what happened back then when the signals were already coming loud and clear that we would run into problems in 10 years' time, if you are going to focus too much on fiscal conservatism, then you can actually run into a dead end as well.